If you had bought the greatest of the big tech companies is Google. Google is up 41%. Apple is up 39%. Microsoft's up 22%. You might have won. Those were all better investments than the S&P. Much better than NASDAQ, much better than gold. Not as good as Bitcoin, not as good as MicroStrategy. But if you bought Amazon, you're down 18%. That was overvalued in the summer of 2020. A bunch of 20-somethings were just buying Amazon because they thought, well, we're all ordering Amazon stuff, so it must be good. Well, when you buy something that everybody else understands to be good at the same time they all agree with you, it's normally bad.
Yeah.
Facebook is down 41% since then. Netflix is down 54% since then. So half the big tech got shellacked. The other half did pretty good. And now, last point, what if you bought enterprise software? We compete against companies 100 times as big as us. Oracle, SAP, Microsoft. Oracle is up 39%, IBM's up 6%, Salesforce is down nearly 20%, SAP is down 45%. So, summary for us, MicroStrategy's strategy was buy as much Bitcoin as you can and buy it with equity and debt.
Hello guys, and welcome to another video of Crypto Money Talk. You guys heard Michael Saylor only believes in buying Bitcoin for the moment to survive the crash, and he believes Bitcoin is the only thing that helped MicroStrategy survive and outperform the competitors. So we're going to talk about the what Michael Saylor believes about the future of Bitcoin, along with what's happening around Bitcoin in the market right now. So now, before asking Saylor more questions, let's see what's happening in the market. And the most current information is that selling pressure has developed in the Bitcoin market after the price just reached the psychological level of $20K, leading the price to fall below $18,800 on September 27th. Additionally, trading activity reached a 3-month high, and according to market analyst Michael Van de Poppe, Bitcoin should maintain a range between $18,600 and $18,800 to prevent further decline. The Bitcoin 90-day coin days destroyed measure, on the other hand, has reached a record low, and this is what it says about investors in the BTC market. The supply of old Bitcoins is dormant more than it's ever been, according to Glassnode's most recent weekly report. The amount that one Bitcoin has accumulated after remaining stationary for a single day is known as a coin day. Therefore, the number of total coin days on the network represents the total number of days that all coins on the network have been stationary, or, put another way, how idle the Bitcoin circulating supply has been. Any of these coins with accrued coin days that move automatically have their coin days reset to 0 and are referred to as having been destroyed. The number of coin days that are destroyed in this manner each day throughout the entire Bitcoin network is measured by the Coin Days Destroyed indicator. Spikes in the CDD may indicate that these older, typically more resolute holders who amassed the most coin days in the market have been spending their coins. The 90-day version of the indicator, according to the paper, can assist us to identify periods of increased and decreased selling pressure from these hodlers. This suggests that excessive hodling at levels not seen during any of the prior cycles has been the most recent investor activity in the BTC market. Now, let's ask Michael Saylor, why does he believe Bitcoin is the only solution to having your money safe? Why only crypto or Bitcoin?
I think that if you're an individual looking for the rational path forward, what you want to do is embrace technologies or ideologies that reinforce individual sovereignty and freedom, and they're rational. So hence Bitcoin, right? Like, if you have a bunch of money and you have a choice, are you gonna buy $1 million of gold and put it in the bank of a centralized institution that will seize it? Are you going to buy $1 million of land in the middle of Beijing where the government of China could just take it from you? Are you going to buy $1 million worth of a stock in a Chinese company? How about an American company? How about an Argentinian company? Or are you going to buy $1 million worth of a crypto asset that's in cyberspace beyond the reach of a government or a corporation. And so clearly the answer is, if you take all of your money and all of your power and you put it in the middle of Beijing, right? They own you. And if your life is not consistent with the policies of that government, then you lose everything. If you took all your money and you invested it in New York City, the mayor of New York could just take it. And if New York, if you took all your money and you put it in New Zealand, and New Zealand locked down the economy for a year, right, then they own you. So if you're looking for sovereignty and freedom, or a rational path forward where you get a choice, then you need to actually put your property beyond the reach of a government that might be irrational or that might be capricious. And you need to put it beyond the reach of a corporation that might be influenced by said government.
So you heard Michael Saylor say that he thinks everyone should keep their money secure, private, and most importantly, out of the hands of the government, and that at the moment, Bitcoin or cryptocurrency is the only way to achieve so. In addition to this, on the flip side, data from Glassnode reveals that the amount of Bitcoin held by short-term investors has been declining for 431 days. Glassnode's most recent weekly analysis indicates that each cycle, the STH supply and profit typically passes through 3 phases. The total amount of Bitcoin that is now being held on the network at a profit is represented by the supply and profit indication. The statistic works by determining the most recent price at which each coin on the chain was traded. If the price of any coin was less than the current value of Bitcoin, then that currency currently has some unrealized gains. Finally, a well-known conservative crypto analyst made a bullish prediction regarding the price of Bitcoin when discussing the future of Bitcoin and other cryptocurrencies. A YouTuber claims that as the digital asset continues to spread, Bitcoin will steadily increase until it reaches $1 million. Invest Answers indicated that Bitcoin is getting close to declining returns in a YouTube video. When an asset reaches a point where increased future investments produce lower profits, it's said to have a declining return. The crypto analyst claimed that every new market cycle, compared to the previous one, Bitcoin delivers investors 5 times less return. Despite the apparent declining return of the digital asset, the analysts provided a different perspective on Bitcoin. They referenced Metcalfe's law, which states that networks gain value as their membership grows. Applying Metcalfe's law suggests an optimistic case scenario for Bitcoin if it follows the pattern of disruptive networks like smartphones and the internet. Accordingly, a conservative estimate of Bitcoin's future value has it at over $1 million by the year 2030. So that was all about Saylor's views and why he prefers Bitcoin over every other asset, along with what's happening around the market. So what do you guys think of all this? Give this video a thumbs up if you found it helpful, and be sure to subscribe to our channel for more content like it. See you later in the following video. Until then, goodbye.